Thobble coming out and grabbing the Masters by the throat early because that's kind of what I'm watching today.
Is it? It's already up and going. I didn't realize we already started. Damn.
Oh my
That's a
God!
throwback. That's a
Jack
throwback.
Nicklaus, he absolutely snap hooked one. It was tragic. But
I love
so Tom
I love
Watson
that
won the
first.
ceremonial open tee. I love the old guys teeing off. I love all of it.
Yeah, I love
I'm
the old
just a
guys
sucker
teeing
for the
off too.
Masters. I'm in for everyone. So every second of it.
Did they
You guys been
let
down there
Tiger
before?
play? Did they let Tiger play with the designated driver?
No. I keep waiting for Mickelson's music. I want Mickelson's music to turn on like he's Hulk Hogan and just have him come in there and just be like, "Oh my God, it's Phil Mickelson out of nowhere." It'd be
Like,
beautiful.
and then like in between holes, like just play a round of cards.
Yeah. Just play some bets. Bet on himself on Kalshi.
Just a couple bets, like
Yeah,
a bookie. Like, hey, you're not gonna birdie this hole. I'm gonna give you some odds that he's betting like mid game.
completely.
I remember when that guy had to start wearing those Bearing Point hats, and it came out the whole story about how he was into the Bellagio for like 20 sticks or something like that. It was like, oh yeah, that's why
Yeah.
guy's got advertising on every part of his body. All right, let's rock and roll. All right, this is Wall Street Beats. It is April 9th. It's almost tax day. We had ceasefire day yesterday. A big green candle for all the bulls. I'm Ben Bry. This is Kevin Bakes Baker and our one and only Jeff Mackey. All right, let's get it started. Jeff, what we got today? What are you thinking? We're buying stocks now that the ceasefire. Or is it all good?
No, we're not. I'd like to be. I mean, it passed the. My wife was giving me crap for not being long enough test. And it's like, geez, honey, the last month and a half of losing like 1/8% every single day, not that fired up, kind of, it's I mean, it's every single rally that has been sustainable has started with people just calling BS on it. I mean, literally every single one. That's the best thing to say about it, is this one feels as fragile and stupid as all of them. I mean, it's a ceasefire-ish type of thing. That said, as you and I have talked about over and over again, it's when in doubt, I kind of just bet on the most optimistic, dumbest sounding scenario, and that served me really well over the years. And then I kind of outsource my hedge the vol and kind of minimize the damage on the downside. So
What?
very late to short, felt very obvious to short, and the reason that you don't just flip your whole portfolio over and turn all your longs into shorts when you feel like it's bearish is precisely because of last week, right? Because
Yep.
it's you don't rally a little bit in more volatile markets. You rally with face ripping authority that makes you question everything that you know to be true. Is the Strait of Hormuz open? Not really. Is it a
No.
ceasefire? Not in a conventional way where people stop shooting. So it's we haven't really cured what ails us, but that doesn't mean you can't trade it a little bit. There are names that I like. There are names we've talked about them, Ben. I think Netflix, for example, has already been kind of pre-abused down this much. I like the base it's forming. I think it's a new consumer staple that people are gonna be kind of taking advantage of that they're going to be using streaming. Amazon, for that matter. You know where the Masters first coverage is going to be today? On Amazon. Like these companies are the only ones that are going to be making money streaming. They're so much better at it than the conventional networks. There are fundamental stories that are worth buying. Do I want to put a zillion% in them today? Oh my God, no. Absolutely not. Because sort of why? It's there's no rush really. And
Yeah.
so I'm not betting. It's gas prices broke a little bit. If they keep breaking, I've been saying all along, that's your chart. Just look at what consumers, you can sophisticate it up as much as you want to. You and I can talk all wonky, and pull out our textbooks and stuff, but to me, it's gas prices are where the consumer lives, and that works well enough as a proxy for as long as those are ramping straight up, it's going to be consumer headwind. it's also going to be margins. I understand everything else about the supply chain and all the other implications, but just the way to dumb it down to make it cleanest is gas prices up, consumer spending down, and the longer that relationship lasts, the worse it is. That's taking a pause, so maybe things will improve a little bit. That's not a green light, but it's yellow.
Yeah, yeah. No, it definitely wasn't a ceasefire, but I think I told a few people yesterday. I was like, hey, if you want to fade the ceasefire, buying crude oil June futures was the better way to do it than shorting stocks. Which I think
Kind of buying
overnight is.
anything down 17% is just like, what the hell is,
Yeah,
I mean,
yeah.
I mean, it's just like I wanted to buy crude oil, if I even bothered with that at all. It's like, it seems good is the thing that's going down 18 straight percent. That seems like that is a rather excessive move.
Yeah, and I think that's right. And I think yesterday we saw oil prices hit 84 and on the June contract, and then bounce back to 91, 92, and that is definitely the epicenter of what's going on. Stocks, not your consumer stocks, but most consumer stocks, I should say. Jeff, I was at Restoration Hardware. I was couch shopping last week. I have to say, I can understand why Gary's having a hard time. The customer service wasn't great relative to the other places we went. It was 20% more expensive. Still nice stores, but the overhead on those stores. We had the house car take us from one Restoration Hardware to the other. And I was like, this just seems like everything wrong with Gary. I mean, is there
Just
a
everything wrong
price?
with Gary, right? I bet you could have played racquetball in those stores. How would you even begin to staff like an eight? It's the store they have in the meatpacking district of New York is hilarious. It's 8 stories, give or take, with a restaurant on top. We went through there after we had dinner. I took the family there a few months ago. There's no way to staff a store like that. It's and there's no reason to have a department store size furniture store. It's just an insane concept in anything other than a screaming bull market, like on a Saturday afternoon. That would be one time for it to make sense. Otherwise, you've got like a person roaming around on every third floor. It's like it's how does this even work? How do you not have homeless people just like falling asleep on the bed displays? It's crazy.
Yeah, and there was a delay in getting a cloud couch until August if you wanted their non like starter crappy fabric. So if you wanted like a real product, like a real fabric, is like delayed till August. And I think that just shows you the supply chain that they have. They make more money because of it, but then they lost me, a consumer, and me right away. I was like, I'm not waiting 5 months for a couch. What are we talking about here?
And that's the problem with tripling down on the super high end, right? Is because you finally make a sale, you can't really, it's no one wants to pay 20,000 for a couch and then have it delayed 8 months. Like if you're going to be kind of laying that type of money out, you expect real custom service. You expect, a craftsman to come out and stitch the thing together in your living room that afternoon. You can't really do that. That's why chains come up with kind of mid end, lower end, and sort of a range. And he's just tripled down on it now. Does that even seem like a short at this point? I don't know. They have taken it to the woodshed so many times. The answer to me is not really. It's not a great
No.
looking chart, but I mean, it's whenever Gary gets kind of this extremely crazy without actually changing any of the numbers, which he did. Gary makes up metrics when he's kind of just faking it really hard. Remember he made up the demand metric where
Oh yeah,
it
that
turns
was
up demand was up 13%, and I'm looking through financial textbooks like what the hell is that? They it intends to purchase is that's not a real financial metric. Yeah, but he was actually relatively forthcoming once he stopped quoting Einstein in his last call. I think he realizes where they are. I think the sales leasebacks, like he's behaving rationally now that he's behaved irrationally to the point of putting the company into come to desperate straits. What's that worth? I don't know. Someone else can go play with that stock if they want to.
Yeah, I mean, I was more thinking about it like, where do you buy it? Because I have a buddy who's been saying that they have $5 of earnings power for a long time, and I just pulled up the Bloomberg, and it's 536 for this year. So, what do you pay on kind of that multiple? I don't know. I guess 100 times got bid, or 20 times got bid $100. So yeah, it kind of comes back to what we were talking about with me and you the other day. Is like some of this stuff is kind of getting to where it's, hold your nose and just buy on some of this stuff because it's so beat up. Which is weird because the S&P is barely off the all-time highs, but in consumer land, a lot of this stuff looks like it's 2020 oil type of
Yep.
situation.
Yep. And I think there's two categories of it. There's the hold your nose camp, and then there's the stuff that really hasn't totally collapsed and behaves sort of well, but those are going to, that's the land of low multiples. You need a lot of fundamental catalysts, and you need their numbers not to matter this year. It's the upside of the consumer is also the downside. They're going to come out with terrible earnings that, just like last year with the tariffs, our expenses went completely bonkers. Like, we don't have a spreadsheet to account for oil tripling last quarter. What are you going to do? That's a really plausible excuse. That's a Wall Street's willing to look past sort of, we stuck to our fundamentals, our multiples low, and we're managing this the best we can. I don't think that gas has gotten to the point that you're going to take anything but the worst chains out of business. But if you're operating something that's high multiple, that's relying on having a really good year, we've taken really good year off the table for most of these things. Like RH, it might be a buy here, but they're not going to blow out their second quarter numbers. It's not going to be a fantastic, holy crap, you wouldn't believe the number of super expensive couches that cost as much as a car we sold last quarter.
And we're still
Any
not at
other
the point
any
where
other stocks that you're looking at as we enter earnings season? I know retail earnings season, is always in that like T+1, T+2 delay. But is there
I count
anything?
everything as a retail. To me, retail just means consumer. It just means crap that people buy. And so, again, it's I kind of like Netflix. I kind of like IMAX here. That's a name that they've done nothing but execute. I think that that's a super easy name for people to think that, I'm short here. This is garbage. No one goes to the movies. It's none of which is true. And it's actually kind of like makeup. People go to more movies when things are bad because they go to less nice stuff. IMAX is the only type of theater operation that's going to operate. They've got, if you're running AMC, you're running any of these other chains, you have to provide a better experience than sitting at home. And so that's the only way out. IMAX is your answer for doing that, whether they're upgrading someone else's theater or building what they own. Stock's been on a heater. There's nothing wrong with that chart. Pulled back quite a bit
not
after
even a
great
little bit.
earnings. It's one that I love to chase. You feel like you want to chase it whenever it spikes higher. It came down to support, did that pretty well, and and held up on it. And so there's kind of nothing wrong with that name. Again, do I expect them to blow it out? No, but I think people will go to movies. I don't think things get so bad in terms of whatever craziness happens that gets affected one way or the other. And to me, that's just kind of, again, it's a story. They're not reliant on a blowout. They're just reliant on trends that are already in place that aren't, and if anything, are it's misunderstood the impact that filling up and having it cost 25% more. Yeah, and all that said, I think a lot of stuff can do okay if gas prices just flatten the hell out. You know, last whatever it's worth, unless we go just hot guns again, in which case, it's gonna be, they can always go higher still. But $6 is a little sticky even in California. It's I think that that's a reasonable place for us to start asymptoting and maybe going lower at some point. And if they go lower, you can readjust your model and actually start making a model. But right now, if you're analyzing a retailer, you've got a spreadsheet where you just have an X in about three of the squares because you just have no, like, your whole supply chain's gone to shit and your demand is, how'd our foot traffic do? Well, I don't know. It costs $50 to drive to the mall. So, our foot traffic was actually lower. Go figure. Again, a plausible excuse, but really hard to model.
What is this IMAX story? When I was at Fidelity back in the day, I was the biggest theater owner in the country, and
Nice.
this has been a nice little run this thing's having, huh?
Yeah, and the story is again, it's if people are going to go, they're gonna go to theaters that give you a better experience, and so they make tremendous huge screen. Odysseus or the Odyssey, I guess the
Yeah,
new Nolan's gonna be on there. It's gonna
well,
do enormous box office. He wants to release it first on IMAX, so it's always good for them to have a nice tailwind like that. Box office has been pretty good, and they provide a better experience. They provide a reason that you wouldn't just stay home. That's theaters have truthfully, like, their origin was when you started making talkies right before the crash of 29. They were a crap business then. They were overbuilt. They immediately were way over levered, and theaters are always kind of a crap business, but these guys make the guts of the theater, and that's kind of, it's a better experience. It's a reason to leave the house. And again, movies aren't dead, just the way we watch them has changed.
I wouldn't say it's crap because the things about a theater that's a good is you have a negative working capital, so you earn the float, because you're paying your guys 60 to 90 days, and people pay up front, and you don't have a lot of inventory, because the film inventory is
Yeah,
on a
yeah.
variable pay scale, so you don't have to put the capital up for it, and they have pricing power. So yeah, they have a negative kind of low single digit kind of organic volume issue, but I don't know.
They
It's a
remind
business
me of a little
that
bit.
runs
They
at
remind me a
15 to
little bit of
20% capacity utilization and has pricing power. If they could ever figure out how to get people in there for sports, man, I used to tell that to those guys all the time.
They played
there
with
should be a
Formula
way.
One, have they not?
They're kind of an 80s 90s like airline model. Like when everybody would roll them up, they'd get too levered, they'd go bankrupt, they'd make their models like, things are going to be stable, and then all it takes is just 1 year where the content genuinely is crappy from your whole leverage model. They just go berserk. And so crappy business might be overstating it. They've been, choppy stocks, shall we say, historically speaking. It's but that doesn't make them a terrible business. And IMAX is in a kind of a sweet spot there. Still enough meat on the bone for them to grow more. And again, I like the fact that they're arms dealers, and they actually are in the business of firing some weapons too. They own their theaters, and they're also building the guts for other people.
And the last thing, and then I'll move to Bakes. You said that about Netflix, and it's obviously got a nice pop since it got, it's found out that Ellison Boys are going to be underwriting the largest LBO of all time. So I have a question about streaming because I saw a headline yesterday that Disney's laying off 1,000 people. The streaming competition was one of the things that they kind of blamed. And then I saw a tweet, well, maybe last week or something, that you're going to need 12 services to watch the NFL next year. 12. Like, is there a point? Are we getting close to the point where the unbundling? It's always in media. It's bundling, unbundling, right? And those are only two
Yep.
ways to make money. Are we close to the peak fragmentation, and maybe we'll start to consolidate here? And maybe the Warner Brothers thing was just the beginning of it.
The Warner Brothers thing was absolute gift from God for Netflix because it prevented them from just making a super idiot move, and not only that, but they got a breakup fee. It was glorious. It really just sort of almost a biblical saving type of holy cow. What a wonderful thing to happen in terms of streaming sports. Like I said, the Masters is starting at 10 a.m. out here on Prime. Netflix started the baseball season with an interleague game in San Francisco at absolutely the worst time of day. They had cheerleaders, which was an abomination. Interleague game, also an abomination, and they had outfielders staring straight into the sun. All of it's crazy, but all of it illustrates the point that the streaming dedicated services, Netflix in particular, Prime to a lesser extent, they're able to take advantage of the fact that the leagues are willing to whore themselves out to do absolutely anything for the dollar. And the incumbents, ESPN, is so bad in terms of their pricing. To buy regular season baseball, you need like 3 memberships. It's an absolute labyrinth of crap in terms of how you go about buying it. The most bullish case for Netflix is that the incumbent streaming sports are simply idiots, which I don't mean to cast too wide a net there, but go sign up for baseball. Go realize that your ESPN Plus whatever doesn't get you actual baseball until you also sign up for MLB. And then you realize just exactly the opportunity there to just be a monthly service that says, you know what, you want to watch baseball? We're going to give you games on Netflix. They're going to have a Wednesday night game for pre-Thanksgiving. Now, is that smart for the NFL? Oh my God, just, it's like the CTE Bowl. That's just insane to have a Wednesday night game. Should they be doing it? No. Are they going to get the entire country to watch football all at the same time in a way that you can't find on ABC, ESPN, Fox, anyone else? Absolutely. They're more creative at it. They're better at it. There's a Tyson Fury fight matching the heavyweight championship extra eyeballs on a national basis over the last 5 years. As a lifelong boxing fan, that's not normal. It's not that kind of sport. It's a really wonky sport, but these streaming services are consolidating eyeballs. So you're right, Ben. It's we should be at a saturation point. We should be at a point where the bidding has gotten out of control. But as long as Netflix is simply better at doing that, than the other available folks. As long as it's kind of a loss leader for ESPN. Every Disney quarter is the same thing. ESPN programming costs go up, they bitch about it, they have a problem with it. Meanwhile, Netflix is capturing all kinds of eyeballs, charging what they want, making it super simple just to watch baseball, which is what people want. It's kind of remarkable, but as long as that opportunity exists, again, it's the most bullish case for kind of getting long streaming dedicated services as opposed to the conglomerate types. Now, if Disney spun them off and actually got smart people in there to run them, that would be one thing. If Netflix was able to acquire a network, but why would you possibly want to do that? It would be a problem. But again, they've been given this gift. There's a reason the stock has ramped. And I like that it's just been pre-stressed. I like that the fact that, it was getting the crap kicked out of it before the war was going. I think those are going to be the first stocks to come back.
All right. All right, let's move on. Kevin, what are we talking about today? What do you got for us?
Yeah, telling Jen offline. I was up till 3 in the morning. I spent the last 2 days going through 5,550 charts because I need a hobby and a life. But what I do is I span the globe for the constant variety of sport and stocks that look good even when you have this you know impasse, if you will, or I wouldn't be surprised if the stock market goes up 10% a day or down 10% a day, given the headlines that we're watching around here. The one things I do see is I'm hungry, and the world is hungry, and agriculture is looking great. This is FTAG. First Trust and Global Agriculture. That's a pretty chart, and I'm not early. I'm not going to pretend that I am. But you have an Indian uh, uh, producer of SUVs and tractors that I had never heard of before, being their number one name, Mahindra and Mahindra. DE Deere is the second name, and you can go through all kinds of things where. The fertilizer prices are going up. The farmers are getting squeezed. They have to become more efficient, and the demand for farm equipment, I think, is going to be there. So agriculture seems like another commodity cycle to latch onto. I've got other things that bolster that view, but in a sea of ugly charts, this is looking very, very promising to me.
Yeah, we had a guy on my podcast, I don't know, a month or so ago named Nico Hoyt, and that's all he does is agricultural stuff. And he was very bullish from a fundamental standpoint, very bullish. And he said
And
basically, if you get a weather event, and they're talking about this could be a monster El Nino this year, that you could have an explosive setup in agriculture. So that's a good spot to come at from a different angle of just, it's sticking out to you just from a chart standpoint. And then I'm
yeah,
giving it to you that we have an hour long podcast where we talked about the setup and how the war,
that's Betty and the
basically,
Squirrel.
yeah, Benny and the Squirrel, and
Yeah, I'll look it up.
and and we basically laid out the case for how you have an explosive setup there, and that chart does look good, although it doesn't trade a lot. There's probably other versions of that chart that are out there that are looking decent.
Yeah, it's 300 grand a day. So you do it. And what happens though is that when these things go, the volume expands. And I just remember the sort of mid to late 2000s, the potashes, and when these trends get in place, they go for a long, long time. And I think we're beginning another one. And I've got things
Yeah, I
like
mean,
that.
pull up Bungie real quick, ticker BG.
Yeah, no,
That's
and
kind of
yep, I'm with you.
that's a
You
good
know,
looking chart also.
and I could not agree more. And you could say, "Oh well, I didn't buy it at the bottom." Okay, but it's what's happening in the windshield, not the rear view mirror. And if you have a case that this is going further, I'm with you. Bungie is a big name in this ETF. Veggie, iShares, agriculture producers. This trades. I don't know, 700 grand a day. I'm making that number up because I'm too vain to put my glasses on. But I mean, look how similar these look. Deer here, caveat emptor, is 25% of this index, of this ETF. That's a little bit much for me, but I had a good friend of mine give me a pretty bullish case for DE, where their AI capabilities of maximizing what the combines and the tractors do in the field is pretty compelling to a strapped farmer. So again, when I see two charts with slightly a pretty different portfolio construction giving me the same message, I pay attention. And I do fundamental work. I reverse the chronology. I find a chart that's promising, and then I do the fundamental work versus having a thesis and then working on that, and then, oh, by the way, the chart stinks, and I've wasted a month. So I'm doing a lot more work here, and I've got one more for you.
All right.
This is Tucrium. I think I'm pronouncing that right. Soybean Fund, SOIB. They just buy the soybean futures. So if you needed some confirmation that the underlying commodities were doing something, soybeans for one is perking up and is not anywhere near its all time highs. So I could make a case that this is very promising as far as the one of the products. And I'm sure we can go through corn, wheat, and other things and come up with different scenarios. I'll listen to your Benny and the Squirrel podcast to find out what your guest likes the most, and then go do some work there too. But when I have, and there's some other things going on, but those are probably the three most compelling new charts that I came across as I went through 5,000 plus. So I'm going to do some more work. I'll report back when I pull the trigger, and stay tuned, please.
Do you know how they create the like, are they doing front month, second month? What's the composition of futures that they use?
I haven't looked at it yet, but I mean, this is three soybean futures contracts, so it's usually the first three most contracts, the most
Yeah, it's
the shortest
it,
contracts,
yeah,
and
and
then they
I'm just
roll.
looking at the curve, because the issue with the commodity future replication ETFs is, like, a lot of times they run a negative carry, right? So if you
Yep,
if you have
yep,
like a contango curve, the front month you got to pay the roll. This is actually in the backwardation right now, meaning the front month's the highest part of the curve, so you actually earn the roll. And that's just
yeah,
so a little teaching moment for everybody who's out there listening. Like with USO for oil, UNG for nat
yep,
gas, whatever, you got to be careful about that, because they can be okay trading vehicles. Like if you bought USO into the war, you did well, right? But on an ongoing over time basis, if you're paying the roll, you are not going to be happy with your long term performance. It's very difficult to make money in commodities. It's never been an easy business. Let's just say over time the returns are pretty shit. So you got to catch them at the right moment.
and, the first thing I do when I come across something like this is I print the fact sheet, which gives me all the things you mentioned, how they the structure of the portfolio, the futures contracts, what have you. And if you don't like what you read that, then just put it in the trash and go on to the next one. But it's chart first, fact sheet second, and I only need 10. I own 9 right now, and I'm up for the year, and so far things are going well. I'm knocking on wood, but so far it's working.
All right, last question, boys. Who's winning the Masters?
I'd love to see McIlroy repeat. I think that'd be awesome.
Can't hear you, Jeff. Still can't hear you.
Snap hooked one completely off the. You still can't hear me?
Now we can. You're good.
Now? You can't hear me because I've got access.
Yeah, we can hear.
Okay, great. McIlroy is he snap hooked it on one into places I have no idea where into the other fairway. Bryson just hit out of a part of Augusta that I've never seen before. It's exciting. That's all I've got to say is enjoy the Masters, boys. The market could use a break. This is a perfect time for kind of the best of all the majors to be taking place, and Bryson and Rory are on the course. It's the best app, by the way, in all of appdom. Whatever the
it is great.
secret
it is great. I agree
power
with you.
infrastructure does down there to make apps, like Gates is a member, the IBM guys are members. All their intellectual firepower is dedicated to just making the Masters app the only good app in all of golf. So strongly encourage people to tune into that and maybe trade a little less for the next couple of days.
Make an azalea and enjoy the unofficial cocktail of Augusta National and enjoy the Masters. It's pretty tasty.
Well, I'm going to go with Scotty Scheffler. I'm going to go chalk. I'm going to take Scheffler. And then
he's got a new baby. I don't know.
I'm going to cheer for my Wisconsin Badgers today in the Frozen Four. So that's we got that today as well.
Me too. And their 24-year-old freshman goalie. It's a beautiful team construct they've got there.
Hey, look, it's a new era with the NIL. We just have to make sure we beat Michigan so Michigan doesn't win the hockey and the basketball national championship after winning the football last year. That's too much winning for Michigan. Jeff and I are Minnesota and Wisconsin guys. We can't have those guys winning all this. They're doing what Trump wishes he was doing, just winning so much that they're getting tired of winning.
I know. We're all sick of Michigan. So yeah, I'll be reluctantly rooting for them. And they're Minnesota kids. They've got Russians, Minnesota kids, and 25-year-old freshmen. It's a gloriously weird team construct. But man, they're a hell of a team. Wisconsin, the Badgers for like 5 minutes at a time are the best team I've ever seen. If they can,
let's hope they're good today. Together. All right, let's call it. Yeah. It's getting late.
Good luck. All
this
right,
is Wall Street. I'm Ben Bryce, Jeff Mackey, Kevin Bakes Baker. Enjoy the Masters and keep your sanity out there. These markets are not for the light. See you later. Bye.
Thank you, folks. Thank you, Jen.